Hi, this is Eric Ausgerson. Welcome to today's AICPA Town Hall update on the CARES and Paycheck Protection Program. We greatly appreciate the opportunity to be with you and share some very, very timely updates and information. And once again, I'm Eric Ausgerson. I'm one of the AICPA executives overseeing our CARE and PPP activities. There's a lot going on, I know with all of the firms out there. There's a lot going on here at the AICPA. And with me today for this town hall and we're going to be doing this every Thursday, are Carl Peterson. Carl Peterson, I think a lot of you know him. He's our small firm lead. So welcome, Carl.
Good afternoon, Eric. Glad to be here.
And today we also have two of the new fintech lenders that are going to be part of the Paycheck Protection Program. We've got the co-founder and CEO, Rohit Arora from Biz2Credit. Welcome, Rohit.
Yeah, thank you for the invitation, Eric.
Thank you. And we also have Paul Lindsay with us from Intuit. Intuit's got a lot going on. They have been approved as an alternative lender, and they also have just recently launched some tools to assist people in navigating the PPP Act as well as CARES program. So welcome, Paul.
Eric, thanks so much for having me on.
So let me now just cover a couple of housekeeping items, then we'll get into the agenda and covering many of the very, very timely updates. So first off, regarding earning CPE, take a look at the toolbar located at the bottom of your screen. These will help you interact with us. And to earn CPE, you're required to click on 75% of the green checks that will pop up throughout the presentation. Once you've done 75% of those clicks, you'll be able to access your CPE certificate in the red button above. If for some reason you can't access it, don't worry about that. We will send you an email where you can print the CPE certificate out at a later time. A couple of additional helpful hints. One, make sure you adjust your volume on your computer. If you want to, we do want you to ask questions. So use the question box to submit questions. If you have a technical question, ask that. If you've got a question on some of the content, please bring that to us. And we've got a big team that are going to be responding to them throughout today's presentation. And then you're also able to download the materials with that download button. So now let's move into the agenda. What we're going to cover today is we're going to kick this off just talking broadly about what's going on with PPP, talk about a few of the key issues. Then we're going to do a more detailed review of the recent Treasury guidance. Carl Peterson will take us through that. Then we're going to talk a little bit about what's happening in the lender community and some new capabilities that will be coming out in the coming days. And we'll close reviewing our resources and having a general Q&A. So first off, when you look at what has happened over the past 2.5 weeks, it's quite outstanding. I mean, there really has never been a program that has been stood up so quickly. This was signed into law on March 27th. Prior to that, there was a lot of activity in D.C. around the formation of the CARES Act in this PPP program. We were active throughout that legislative process, and then since it was signed into law, you can see all the different key milestones here. I mean, the release of the forms, the Treasury guidance coming out multiple times, discussions with the key stakeholders, many recommendations that were then incorporated into some of the guidance. And here we are now on April 16th, 14 days in, and $350 billion has been approved, has gone through the SBA E-Tran system. And as we all are well aware, the money has run out. And right now, as we're doing this webinar, Congress is actively working on getting the next batch of funds approved. We expect that to happen. It's really a question of when, not if. So hopefully that happens today, because we know there's so many business clients, small businesses that are very frustrated related to not being able to get their application in. We actually released a statement today related to that to the policymakers and to the broader press. So we're doing everything we can to try to get that approval completed with the policymakers. Just a little bit more about who we're talking to and how we're bringing you all of this information today. We are talking to the government officials, the SBA and Treasury, basically on a daily basis as we digest their guidance. We've got lots of questions, lots of feedback that we're providing to them. We've probably never been busier in communicating with the 44,000 firms. We have mobilized a big team to stand up our resource center, and we're also very actively speaking with you to listen and learn on what you're dealing with related to this overall program. And then we also have established quite a dialogue with the payroll providers. We'll talk a little bit about the status of our coalition, as well as the lending community, and we'll be talking about that, how we've been working with some of the banking leadership to make sure they're supportive of the overall relationship with the firms, in particular when it comes to the agent fee. So let's now just talk about 3 issues before we get into a little bit more detailed discussion on the April 14th Treasury guidance. What you're looking at here is this item that we're calling self-assessment of need. We think it's very important for firms to sit down with their clients and understand that the PP application form is going to be available via the public, via the FOIA policy, and that's the Freedom of Information Act. So as you can read here that the information in the loans will be automatically released, includes information about the applicant, information about the loan amount, and these are things that it's important for you to discuss with your client, because we're moving very fast right now, getting all of these applications in. But as history has shown, there will be a review by governmental entities as well as other external parties on who received these funds. So that's just something that we're talking to firms about. There's articles that are being written about it right now, and it's just something we want to highlight to you. So, Carl, I know you've had some discussions with firms on this. Do you have any comments you'd like to add?
No, not really. It's a concern, and they need to be advising their clients and make them aware that it will be public.
So moving on to another topic is related to assisting your clients with the application process. And there's a couple of things that we've put out this week. One was related to independence considerations that was released on Monday, related to how this is viewed from an independent standpoint. And accepting the agent fee for advisory services does not in itself impair independence. If you sign the PPP application, you will impair independence. And for attest clients, that's clearly something that you should take into consideration. Carl, is there anything else you'd like to add related to this topic?
There is. We actually are going to have an article or guidance put out by the Center for Plain English Accounting that we expect to have hopefully yet this week that'll give greater detail on the implications of the application process.
And one other item that I'd like to add is that we are encouraging firms to think about this, from an advisory standpoint. You can do a lot of advisory work outside of the application process. We know a lot of firms are doing this. Just be sure to have an engagement letter that reflects the clear understanding of these services. It only takes a couple of minutes to fill out the actual application, and the client can do that. and you can scope your advisory services outside of that. We also know that a lot of firms are also receiving an agency fee, and that is something that you can do, and it is also something that we're talking to the banking community about, and we've been talking to some of the leading associations to try to put out a statement that highlights the support that bankers have related to the firms providing these services and making sure that the bankers are supporting the payment of this agent fee to firms. So one additional item that's come up a lot in the past couple of days is related to correcting PPP applications based on the new guidance. One thing that's very clear is that there is a safe harbor provision if you've already filled out a PPP application and it was based on the guidance at the time, which has changed. You don't have to correct that. But in many cases, in particular with the recent guidance that came out on Thursday around how partnerships are treated and how partnership income should be in the payroll costs, there's many firms and there's many small business clients that want to modify or correct their PPP application. We understand that. The SBA understands that. And here's the current recommendation. Don't cancel or pull your existing PPP application. Speak with your lender. They have a lot of discretion in the process. And then also make sure you document this input. And we are actively discussing this with the SBA, and we're looking for additional guidance from them, and that should be coming out shortly. But in the meantime, this is the current recommendation. So, Carl, with that, I'm going to turn it over to you to provide some additional details related to the April 14th guidance.
All right, very good. So the guidance that came out the other day is primarily focused on the self-employed making an application, and it provides that additional clarity on partners in the partnership. So if we look first at who is eligible, it's the self-employed that are in business on February 15 of this year and is a U.S. resident or has filed or will be filing a 2019 1040 Schedule C. At one time, there were questions of whether a partner files on their own, but the guidance is direct and it's very clear. Partners are not to submit a separate application. It is the partnership that files the loan application and includes the partner's earnings of self-employment as a payroll cost of the partnership up to $100,000 maximum on an annual basis. Let's go to the next slide. All right. So here's an example calculation for self-employed that do not have any employees. You take your 2019 Form 1040 with Schedule C, line 31, that's the net profit, and the amount from this line is then limited to $100,000 for that owner. It's important to note that if the Schedule C is a net loss, the business is not eligible for the loan program. Divide that first number from line 31 by 12 to get your average payroll cost. And remember, the maximum allowed from line 31 is $100,000. Then just like the other PPP applications that you've done already for your clients, multiply that number, which is the average payroll cost, by 2.5. If the client actually has an EIDL loan to be refinanced by the new loan, you reduce this calculation by the EIDL amount. The documentation you need with this application would include your 2019 1099 miscellaneous forms that detail the compensation, or bank statement, or book of record showing self-employment, and of course, the client's Schedule C for 2019. And for new businesses starting in 2020, the applicant provides a copy of a 2020 invoice or bank statement or book of record to prove their existence. So if the self-employed applicant has employees, there are additional items to include for the payroll costs for the maximum loan amount. You start with the same line of Schedule C, line 31, net profit, as in the previous slide. You then add to the payroll cost the gross wages paid to employees as reported for 2019 on their quarterly payroll reports on Form 941, plus pre-tax employee contributions excluded from Medicare. Add to these payroll costs the employer-paid health insurance from line 14 of Schedule C, the retirement contributions reported in line 19, plus any state and local payroll taxes. You do not include the employee's share of these benefits. So you total each of these payroll cost items, divide that total by 12 for your average monthly payroll costs. Take the average payroll costs that you just calculated times 2.5. Subtract out of this amount any EIDL loan that's to be refinanced, less any EIDL emergency COVID advance, which, as you recall, could be up to $10,000. Documentation for this process, make sure you have available your 2019 Forms 941. I would also include your annual 940 as filed. State quarterly wage and unemployment insurance, or payroll processor report that will support the payroll costs that you've included and used in your calculation for the application. Have documentation or some sort of support showing the health insurance and retirement contributions as reported on Schedule C. And then, of course, a copy of Schedule C for 2019. And for new businesses in 2020, a payroll statement or other supporting documentation for the period covering February 15.
Yeah, I mean, just on this one, and we've got this slide here out of order here, Carl, but one thing that we are making a recommendation on is, and that's something we've provided to Treasury and SBA, is using a 2018 filed return, and for some reason the prepared return is just not done yet. I mean, it doesn't have to be filed, but that is a request that we have into Treasury and SBA right now.
Right, and the banks have the discretion, right, to use that supporting documentation if it supports the request, I believe, as well. So I'm looking for the next slide. Oh, okay. All right, you see these funds. You know, these are the costs that are, oh, we're on slide, I'm sorry, slide 16. All right. So, you know, the costs that are eligible, we're jumping to that, that's fine. So let's talk about the debt forgiveness. Our firm services team, by the way, is working on guidelines that we'll have posted for documentation that you should have. And then a debt forgiveness calculator is also being created, and that should be out there, we hope, in the next week. But this is what we learned from the recent guidance, that employee payroll costs and related employee, not owner benefits, are actually limited to $15,385 for the 8-week period for those with over $100,000 in payroll costs. Owner compensation, it's eligible for forgiveness, and the amount is determined by their 2019 Schedule C, line 31, net profit, divided by 52 weeks times 8. And also eligible for forgiveness are the amounts for business mortgage interest, rent, and utilities that were incurred during that 8-week period. Go to the next slide. And documentation, of course, is always critical for debt forgiveness, but it's not really onerous. I think it's easy to get the information. One thing that will happen is the borrower will certify that the funds were used for the eligible costs, the payroll, business interest, rent, and utilities. You need to make sure you provide supporting documentation of those eligible costs that were incurred, a lease agreement or invoice supporting that, the rent, mortgage statement showing payment, and utilities for the 8-week covered period. And for the owner compensation, we get all kinds of questions, including, do I have to write out a check to myself or start to have a payroll? How do I do it? And the lender is only relying on the 2019 1040 Schedule C that was used to calculate net profit as evidence of owner compensation. But I would suggest that if you used a 2019 Schedule C that had not been filed yet when you made the application, and they've since filed their Schedule C after application, that you should use the Schedule C and 1040 that you used to that you filed with, and use that as part of your documentation for your request for debt forgiveness. We can go on to the next slide, Eric.
Well, Carl, just open this up for a little bit of discussion here. When you've been talking to many of the firms, I've been talking to firms, Mark Koziel and many others. When you think about the process here, the first step is just determining eligibility. We brought that issue up earlier, just on, this is going to be a some public information that will be shared. So one is, are they eligible? And clearly there's lots of people that are eligible and they have been impacted, but also having that broader discussion with them around, is this something that they'll be comfortable with being exposed, at a later stage. Then secondly, it's right. All about, the application, understanding the application, understanding what they need to do related to that, gathering the documents, working with the payroll providers, and making sure they're doing the correct payroll calculation. A lot of payroll calculators are in place right now. It took a couple of days due to some of the change in guidance for them all to be consistent, but it does seem like most of them are doing it in a consistent fashion. And then getting the next step that we're going to be thinking a lot about is the loan forgiveness, and you were talking about that just now, but putting together, clear guidance related to how that will be done and supported by the firms.
Yeah, and we're looking to create, consistent guidance on consistent documentation sets that will be required for debt forgiveness, and then, of course, the loan calculator that people can use in this process. If I can make one quick comment too, about the, one thing we need to make sure we're doing is looking at all the options. A client that maybe is concerned about the publicity of the public finding out, that they made an application or they borrowed money from the government, maybe that's not in their best interest. So I think we have to look at all the options that are available to them, including, tax credits.
Absolutely, and that's looking at all the different buckets of relief, and that's something that we'll talk a little bit about with Intuit when we get into the discussion about some of the tools that they've put in place. So thanks, Carl. I'm going to keep going here and talk a little bit about some of the other stakeholders right now. And one is this broader AICPA-led coalition. They've played a big role in helping get the data set together, do the payroll calculation. I can tell you that some of these companies have repurposed, 1,000 or 2,000 workers to support getting those reports out to the CPA firms, to their clients, and they're all thinking about how they're going to support getting the data put together for the forgiveness. So this is something that a lot of work's been done, but in some ways the journey's just halfway done, and there's going to be a lot more applications coming in. Once they approve the additional $250 billion, and those clients potentially will need more help than these early small business clients that have applied that potentially had their documents in better order. So there will be more work required to get the millions of businesses to successfully put applications in over the next week or so, and then there's going to be a lot of work with this community on the forgiveness elements, and also, just working on the restart of the business. So this is just something that we'll leave with you on the why behind this overall coalition, which is helping us. I can tell you this is helping us drive advocacy in Washington, D.C. and help resolve some of these matters that we've been talking about and hearing from you on. So now moving into a discussion on what's happening with the lending community, how the lending community is building these connections into the SBA platforms, the E-Tran platform, how the lending community is trying to standardize their file that they're requesting to support these applications, and then also how the lending community is working with the borrower, working with the firms, and just having an effective relationship. And as I said earlier, we are working with the banking leadership on putting out a statement that will show mutual support that firms are going to engage with the banker and put together an engagement letter on what services they'll be providing if they are receiving that agent fee. So with that, I want to bring in both Rohit and Paul to this discussion. And one thing that I've been asked a lot of questions on, Rohit, is when people are saying, okay, where is the money? Has the business got the money? And you hear reports that banks have taken this much in applications in. So some bank says, I've taken in, it could be in the billions. And then you look at what the SBA was reporting, and then a lot of people now are interested in how much money have the small businesses actually received. So there's like those three different buckets: the applications from the bank, what the SBA E-Tran system has actually processed, which we now know is $350 billion and about 1.6 million applications, and then what has been distributed. And I'm aware it's in the tens of billions of dollars. But why don't you, Rohit, just talk a little bit about, you're so familiar with this, with the process with the SBA, and also talk a little bit about why banks initially are focusing on their clients.
Yeah, so I think these are very relevant questions, and so what we have seen at Vistocredit, we have been in constant touch with Treasury, SBA, as well as Rubio's office, because Mark Rubio was the guy who actually was the champion of this bill. And we have seen three distinct trends. So the first trend is that banks have right now focused more on their existing clients. They were very concerned about the KYC AML piece, and they were just also scared of the fact that they will run out of money if they don't act fast. So most of the banks that we work with quite a lot of banks because we provide them with a technology platform also. And my conversations have been that we have been very focused on our existing clients. Only last 2 or 3 days they were starting to open up for non-clients, but I think that came too late. So that has been one challenge for a lot of businesses where their existing banks were not offering this product, or they were slow, and when they tried to go to other banks were not accepting them. So that's one aspect that has been a little bit of a sore point for a lot of small businesses. The second aspect is the E-Tran system itself, which is it's an SBA system which was never designed to take so many applications. So traditionally SBA does like 28 billion a year, and they have processed like 350 billion in like less than 2 weeks. So initially they were having a very hard time in making the system stable. And then they worked with AWS. So last 1 week it has been better, but still the problem has been that most of the banks don't have any integration into E-Trans. So a lot of banks had put thousands and thousands of bodies to just input the data manually. We at Vistocredit have now built XML feeds and all that, and have been successful in putting the data together in E-Trans through XML feed. But still it's not the most ideal solution, because the most ideal solution would have been seamless APIs in this day and age. So I think that has been a challenge, and SBA is very aware. They're working with AWS, they're working with some of the other third-party vendors in trying to solve. And I think in last 1 week they have done a commendable job, I would still say, in stabilizing the system and at least processing such a large volume of applications. The third thing that we are still seeing is that the actual disbursement of funds is still very low. In our estimates is 10 to 15%, and there are a few reasons. One is that most of the banks are getting back to the customers with E-Trans number. Now they want them to sign promissory notes. Certain banks also want them to open up accounts if they want to fund these PPP loans. So that's taking time, and estimated time period is anywhere between 3 to 4 business days up to 10 business days, which is allowed in the SOP. So I think having fintechs like us and Intuit and PayPal and everybody, I think is very important now, because there's an important need for digital experience, especially right now when there's so much social isolation, and also from a KYC perspective, because trying to do KYC in a traditional manner is almost impossible right now, and that's where technology, I think in the next round, will play a bigger role. And then whether you're new to a bank or new to a lender customer or existing to a lender customer, issues will actually go away. if more technology is used for KYC, AML, and also down the line for forgiveness, because that's going to be the other big step after, this closes down, the whole funding piece.
Well, thanks, Rohit. And Paul, just some of the questions that are coming in are related to, there's a lot of small businesses that haven't been able to get their applications in, and that's a very important element of PPP. And I think this is going to be an important element of some of these alternative lenders, these fintech lenders, supporting some of the smaller businesses. So how are you thinking about some of the things that Rohit mentioned related to the platform that you're going to be rolling out to support this process, or that you have rolled out?
Yeah, no, Eric, it's a great question. And I think that, you're going to see a lag here. I mean, I think a lot of the folks now, unfortunately, that are in need of these loans deeply are those underbanked and underserved communities. And they might not be as savvy enough to have had, been in line with their lender the first go around to get access to the loans, and also they may not have CPAs in many cases, obviously. But we were approved late last week as an approved SBA lender for PPP. PayPal and other fintechs were also approved. I believe Square was as well. We were able to take applications and fund a number of loans this week until the money went dry. We have an advantage. I found it really interesting listening to Carl's, presentation. We have an advantage in that we have access to so much of the data of our customers. So a lot of those eligibility requirements that Carl outlined are visible to us on the back end of our system. So we know who qualifies and for how much and who doesn't. And, we're still looking for secondary market guidance and access to the PPP loan facility, but we're certainly supportive of more funds for the PPP and want to continue to move fast and be ready for the next wave when Congress acts. So we're going to kind of use this time to be focused on hardening our application system and that E-Tran integration and working towards, acceptance flows. The other thing I'll mention, Eric, and this might have been one of the products you were alluding to, that product, the PP product, is related to our customers, but we also worked to build a product free to the public to help people determine their eligibility for PPP or EIDL, and also that also has a loan amount calculator to give them an estimate of what their loan would be, and also a loan forgiveness calculator, and it's all available at aidassist.intuit.com. And it's right now it's not end to end in the sense that it directs them right to a lender, but I think it does give people peace of mind to know that they do qualify, how much they'll be able to get, and how much of that will be forgiven when they do get their PPP loan. And gosh, we really hope Congress acts quickly so that everyone can have access to that.
Yeah, thanks, Paul. I'm going to just one question. We're going to have a couple more questions here on the lending, but we got so many great questions coming in that people are submitting, and I just want to read one out that I think others may have. They said, is the AICPA recommending that a CPA firm tell the bank that they acted as an agent on behalf of their client applying for PPP, thereby entitling the CPA firm to collect the agent fee rather than just bill the client for the actual time they may have assisted them in the process? It's a good question, and the reason why it's a good question is because this is really your decision. When Carl and I just discussed this, and we've had this discussion with many firms, it's up to you. If you just want to, in your engagement letter with your client, scope out just it takes 2 minutes to fill out the application, that work, and bill them for the advisory and support services, we think that makes a lot of sense. There's also some firms that do want to receive the agent fee. In that regard, it makes sense to sit down with the bank and let the bank know that you're going to be providing that service. And and to get that payment from the bank. So it's really your decision, and that is how we're advising firms. And some firms may do some advisory work and have the agent fee. Some firms may just have the advisory work and they don't have the agent fee. Carl, I'll let you just, because I think this is really up to the firm, and we just want to provide you with the best available information related to things such as independence, which we have, and also with just that guidance around making sure you document this in an engagement letter. But Carl, why don't you just expand a little bit more to make sure there's no confusion on how we're in direction.
Yeah, I would add on to what you said there, Eric, in that, that banking relationship is so important to that small business, and that banking relationship is super important, to the firm, and that reaching out to the bank that the client is using first at the front end is going to help solidify that relationship and make it smooth, and so that everybody's on the same page, that you're providing the services and whether or not you're going to get the fee or not get the fee. But the whole comfort of everybody involved in the process will probably rise up. We think it's a best practice to do that. I had alluded to earlier that we're going to have a very detailed, specific article coming from the Center for Plain English Accounting coming out. It looks like we'll be out this week. That'll probably give some very clear guidance, especially for those firms that are concerned about independence in helping their attest clients or assurance clients. And I would really be watching out for that to get some very clear guidance.
As we've also heard from the banking community, just to share, and it's important that we're talking to all the stakeholders. Some of the banking community has had some concerns with some advisors just coming in and putting a stack of applications there and just saying, hey, we want our agent fee, and they're not, and the banks just, well, we want to understand what the advisor is doing, and that's what Carl just mentioned. It's good just to let the bank know you're going to be providing the service. The bank's going to be paying you, and you really have the option of working with the bank or just billing your client and noting in your engagement letter that these services are outside of that that specific element of just filling out the application form. So let's go back to you, Rohit, and talk a little bit about just where you see the new clients going. Maybe a little bit more on that. When do you think that will be better supported by some of the lending community taking on new clients due to the KFC and FinGen regulations?
Yeah, so I think the good news that I'm now hearing from our banking partners, and also, we just launched a partnership with Paychex also, is that, we're starting to accept some of the new clients. The only thing is the KYC and the AML process still has to be pretty tight, and that's where I think CPA firms can also play a big role. So I think it has to come either from a known source, or if it is coming online, then, more checks and balances have to be done. So my recommendation there is that if you have a payroll company, and if you can route it through a payroll company, or if you have a CPA and you're coming out through a CPA or an accountant, it's still a trusted source for lenders, and that gives them more confidence. I think in the coming days, as a fintech player, we are used to dealing with a lot of new customers. I think the nervousness is not at the front end. The nervousness is more at the lenders at the back end, that, how the overall forgiveness program will work, in case there are issues with KYC kind of stuff. So I think that's where people are getting more confident. So I've seen a change in the mindset of, the lenders over the last day or two, where they were totally opposed to taking any new clients, to a point where they are, saying to players like us that, that they can, do that with the intervention of technology. And as we are experimenting with more and more affiliate partners, because if somebody comes to an affiliate partner, even online, even if they are new, there's a lot more confidence than if somebody is coming totally randomly. So I think that's where, any existing relationship that the businesses have, if they can leverage that, even to come to a new lender, I think that will be a lot more helpful for businesses to get their loans processed much faster.
Okay, thank you, Rohit. Hey, Carl, a couple other questions coming in. There's just
Sure.
SBA says you cannot bill borrower for completing the app, and then there's another one asking about do we have a sample engagement letter for someone who does not who wants to does not want to receive the agent fee. So two questions.
Good questions. So on the engagement letter, I have not seen an example yet. I know there's been a number of articles and alerts from different insurance companies like Aon and CNA with the AICPA program providing guidance on what should be in an engagement letter, though I haven't seen an actual example engagement letter. But I would definitely check with their professional liability insurance carrier on that piece. And what was the other question again, Eric?
This is the thought the SBA says you cannot bill borrower for completing the app, and that's correct. I mean, so you'd be billing. You're not for completing the app. It's for the advisory work, all of the guidance. That's what would be in the engagement letter. You would not put in the engagement letter
right.
Bill them for filling out the application. As Mark Koziel and others have said many times, filling out the application doesn't take much time. It's the other work that goes into it. So that was the question, Carl. I think I answered it correctly.
Yep. Yes. Yeah, you're fine. You're good.
Paul, there's some questions coming in just about, some of these online assistance tools. You want to expand a little bit further on that, on just kind of, providing guidance and how many people are leveraging that?
Yeah, happy to, and just provide some clarity. And I've seen a lot of questions about what the URL is. It's the product's called Intuit Aid Assist, and the URL is aidassist.intuit.com. aidassist.intuit.com. And on that site, there's basically three functions. There's a loan relief eligibility tab that takes you through an interview process, much like TurboTax and some of the other products that we offer. And then there is a loan amount calculator that gives you an estimate on the amount of money that you could get under PPP. And then there is the tab that it's open to is the loan forgiveness calculator, which has been the most helpful so far in all of the feedback that we've gotten, that takes you through how much, an estimate on what your forgiveness is or would be. So this is the product that is open to the public. It basically just guides people through this process and determines eligibility and gives them those estimates. The other product I mentioned that, Treasury gave us guidance last week or gave us official approval last week to be a lender is through QuickBooks. And we have started funding loans to QuickBooks customers. And, obviously this was brought up earlier. Our customers are obviously easier for us to give the loans to because we know that they're eligible based on their payroll and all of the back end of their business that we have access to. So we are fully confident in providing those loans. The guidance that we're waiting to get from Treasury, in this interim period before we get more funding from Congress, is to understand if we have access to a secondary market where we would be able to, take on more risk and give to customers outside, to non-QuickBooks customers, and make sure we try to get their loans out as soon as possible. As Rohit mentioned earlier, the advantage that fintechs bring to this process is an automated system where we can determine eligibility much faster than a traditional bank can. And most of our customers, and I think PayPal and Square would agree as well, are these underserved rural or gig economy workers who are traditionally underbanked. And we think we're in a much stronger place to be able to provide help and relief to those folks than many of the banks are, which obviously we've seen over the past week with folks, not being able to get loans from some of the bigger banks out there.
Thanks, Paul. I mean, Carl, you want to add anything that just said there?
Yeah. Actually, I think they've got some fantastic resources out there, and this is really just given a great opportunity to, CPA firms and their clients and their customers and stuff. And I know we have a couple of slides coming up, but if we run out of time, just wanted to make sure I mentioned that, Firm Services PCPS has some great calculators. We've just updated our PPP loan calculator for self-employed independent contractors, and we have one set up for every type of business essentially to go through the application process. And then, of course, our tax resource center, as you just hit there for a second, they've got a great calculator there too. And I think it's important that we don't forget that we are advising our clients on all the options that are out there and available for them to get through this crisis.
Exactly, and we will. We've got time. We'll talk about some of these resources that we've got available. And there's a lot of questions coming in just on finding out more about some of these fintech lenders. We are going to post some information around that. Some of these links. One, we can get this link out that Paul's mentioned to make sure you have that. That's something that we can post on our SBA site here, and that's aispa.org/SBA. That's kind of the landing page for all information about the Paycheck Protection Program. So I'm going to ask Lisa here if there's, I know you were looking at this, if there's some categories. We've had so many questions coming in. We've got over 100 questions out there. One thing I want to tell everybody about these questions, we do leverage all of them, even if we don't answer them. We're trying to answer them with 6 people right now responding to everybody, but this is helpful for us because then we take this all into account in what we need to put more resources on our AICPA.org/SBA site to help you, support your clients. But Lisa, is there anything that you want to, as you're looking at all of these questions, maybe a few categories that you want to throw out to us so we can discuss them?
Thank you, Eric. I do have a couple of questions. First of all, Paul, I'm going to ask you to repeat your website again one more time for the loan calculator amount. I think it's AIDASSIST.intuit.com. Did I get that right?
That is it. Yes.
Okay.
And I'm also
so
just
that knocks out.
Yeah, go to Google and type, but that's
Yep. If you just Google Intuit Aid Assist, it's the first thing that pops up too.
So that wipes out about half the questions. But then we also have several questions about what to do if your application for PPP was in process but not approved when this round of funding ran out. Should they stay in line, and will their applications automatically roll into the next round? What if they're at a big bank and don't have anyone to talk to?
Well, I think the thing, it's back to the question, our recommendation there is speak with the lender. The lenders are the ones that are connected and are filing the applications with the SBA. I know what came out today, the SBA is not taking in any applications right now, but I think the lenders are well aware of how they're going to be, turned back on. And maybe Paul or Roa could comment on that. But speak to your lender. Do not cancel the application, and more information should come out shortly, potentially with the announcement once they've made the announcement around the additional funding being finalized. But Paul or Roa, is there anything you want to add to that?
Yeah. So we got an update from SBA this morning that what they had to do was that since they were not accepting any more applications, so they had to shut down the whole, the system. Now, applications which got submitted in last, I would say, 12 hours, they are in a holding pattern within the system. And once, more money comes in, then, they have been queued and they have been prioritized, and hopefully, they will be the first in queue to get approved, and the E-Trans number will come out. So since we had no other way, so they had to shut down the whole system, and that actually blocked a lot of these applications which were inputted in last 12 hours. So obviously, those are in, and I think your advice of being in touch with your banker or whoever is the funder is the right advice. And as soon as it reopens, those will get the E-Trans number. And once the E-Trans number is there, then things will be fine.
So just one thing, I'm very glad that we're having this lending discussion here, because I'm seeing more questions here about, here's one question about the banking relationship. They said this is good advice if the bank is entertaining these conversations. This is around, establishing an engagement letter with the bank. It states that if the bank's entertaining these discussions with a firm, but many are not willing to do this, and there's just not enough of a relationship between the banks and our profession. So I can tell you, we're speaking to the banking leaders, we're speaking to some of the national banks, we're speaking to some of the association leaders, and they do value what the firms are doing here. The 44,000 firms are playing a critical role in helping these businesses apply for these loans, and we're going to really work on that with the leadership. We're going to work on trying to get some statements out. I'm sure there's cases out there where some banks are not, collaborating. One thing, we're trying to assume positive intent, and that's the positive intent of the firms, of the banks, of the payroll providers. It's a historic time for us to work together. So we're really working on that dialogue, and we want that message to be sent out from the bankers. So let us know. Let us know of an experience you're having with a banker that you think is not productive, and that will be helpful. We'll leverage that. Lisa, back to you here. Let's see if we've got another kind of big question that we can address.
I think there's one more big question that maybe we can scoot in pretty quickly. Some banks are asking that CPA certify the numbers, and the person on the webcast asked, isn't the borrower supposed to do that?
Carl, you want to take that?
Sure. Yeah, there are some banks and lenders that, for their comfort, they believe they need to be adding this, and we're working towards getting a consistent, process and data set that they need, that they actually require. But some banks have decided they need something like that, and we're pushing back against that. The verification and certification ultimately is on the onus of the borrower. So we hope that that'll actually change at some point, where the banks will not be asking for outside certification of the documentation.
Anything else, Lisa?
Oh, I think that's it. You're getting a lot of good feedback, and appreciate the guidance and knowing about these sites that are available. So I think it's all good.
Okay, thank you. So let's just, Carl, you hit the resource centers. Is there anything else you want to add related to what we're doing here at the AICPA?
I would tell you that things change every day. We're updating different things that you've already seen, perhaps. If you're looking at, maybe the recommended data set, that's already changed for the self-employed. We've added and made changes there. The calculators have been updated for guidance as it comes out. So, just because you saw it yesterday doesn't mean it isn't new today. So I would keep going back to our resource pages for the SBA program.
Thanks. And let me just, some closing comments here on what our role is and what we're thinking about. As we all know, these small businesses were shut down in no fault of their own, just due to the virus and due to the steps that we've had to take to, address the health issues here and end this pandemic. And while we're doing that, we here, the CPA profession, the financial professionals, what our role really is maintaining the support for these businesses. And we're doing that now through this PPP program. And one thing that we realize is there's been lots of issues. But with that said, the government officials have been working nonstop to put this in place. And if you look at the speed of this program compared to TARP, it took TARP, months to get this level of funding out. And we're a couple of weeks into this. It's a success problem in some ways. We got $350 billion that's been approved, and we're going to get more approved, and we're going to keep these businesses funded. So that's something that we've been very focused on. We think it's a very, very important role. And what we're also going to be thinking about is the restart. The restart's going to be hard. That's not even a topic of the discussion today. Right now, it's getting the funding to the businesses, helping them stabilize, helping them stay intact. do it right, do it effectively, work with the banking community, work with the payroll community, and then we're going to, in the coming weeks, have to start thinking about the advisory role related to these businesses starting back up. So there's just so much to do. We appreciate what you're doing. We understand the frustrations. We're trying to get the answers, and we'll be updating our resources on a daily basis. Leverage the social media, the Twitter feeds. That's where we always post the latest information we have as we're posting it to our different sites. I want to just kind of wrap up here, thanking the different panelists. So, Paul, Rohit, I don't know if there's any quick closing comment you want to make on behalf of the lenders or on behalf of what you're doing at Intuit or Biz2Credit.
I'll go first. I mean, I just appreciate you guys being a great, steward and informing everybody about what's going on. You've been a great partner just leading the charge on this, and hopefully we were informative today to some of the folks on the line, and hope Congress comes up with a solution soon to make sure that PPP keeps flowing.
Well said. Rohit?
Yeah, and I think, I think same here, and I think as the secondary market comes in, there will be a lot more liquidity coming in. And one of the things that we are doing at our end is integrating a lot of payroll companies' data directly, and also opening up more resources for CPAs and accountants, because we see them to be big driver of more applications coming in. And I think there's that's an important piece that we will be launching next week. So along with the payroll integrations that we have already done. So I think that should streamline the process further. There will be less confusion and more money coming in. That means that more money will be in the hands of business owners, much faster.
Thanks, Rohit. And this, I can tell the audience here, every single day we're talking to the firms, but we're talking to these different lenders. And next week we'll have more information on these tools. We'll be publishing it during the week. And I do think leveraging these tools, leveraging the ongoing advancement of these applications, and the banks are getting their applications into a better state. And I heard from a banker today on how much better the E-Tran system was working due to the AWS improvements that Rohit spoke about. And if you think about that system, they've processed more in the past 14 days than they did in like the past 15 years. So it's just amazing what has occurred. So Carl, thank you for your time today. Thanks for the leadership that you're providing with Lisa and the whole firm support team. So thank you very much.
Thank you, Eric. Thank you.
And that's all for now. So everybody have a good night, and we'll be in touch. And we will be holding another webcast next Thursday at 3 p.m. So that's all for now. Thanks. Bye-bye.